The country's gross international reserves settled at $99.6 billion.
The Philippines' dollar reserves hit a new high of $103 billion.
The highest level to date.
The Philippines is rising. Once known mainly for its tropical beauty and resilient people, today it's making waves on the global stage, attracting billions in foreign investments, fueling growth through overseas workers, and building its future with bold economic partnerships. But how did this island nation turn challenges into opportunities? And why are investors paying close attention now more than ever? Let's dive in. Tucked away in the heart of Southeast Asia, the Philippines is more than just a postcard, perfect destination. It's a country of endless surprises. Picture this: over 7,000 islands wrapped in powdery white sand, turquoise waters stretching beyond the horizon, and a culture as vibrant as its landscapes. But here's the real story. It's not just a tropical paradise. The Philippines is also one of Asia's rising economic stars. With one of the strongest stockpiles of foreign currency among emerging economies, the country has economists and policymakers asking the same question: what's driving this momentum? And more importantly, how far can it go? The answer lies in growth. And growth means investment. The Philippines has been actively opening its doors to new opportunities, knowing that fresh investments fuel economic activity, jobs, and innovation. Yes, challenges remain, and global shocks continue to test resilience. But the direction is clear. This economy is pushing forward, and it's showing strength. One major driver: foreign reserves. As of June 30th, 2023, the Bangko Sentral ng Pilipinas, BSP, reported gross international reserves, GIR, hitting an impressive $99.8 billion. Sure, it's not at the scale of Japan or China, but it's more than enough to cover the country's financing needs. And then, some. In fact, those reserves can cover a full 7 months of imports, well above the international safety benchmark of 3 months. Just think about that. Back in 2016, the reserves were at $82.4 billion. Today, they've surged nearly $20 billion higher. That's not just growth. That's stability, smart management, and resilience in action. And here's what really makes the Philippines stand out. It's not only about how big the reserves are, but how well they shield the country from external shocks. Critics point to foreign debt, but the numbers show a different story. These reserves act like a cushion, softening the impact of risks and giving the Philippines the space to keep moving forward. To put it in perspective, World Bank data shows that by 2021, the Philippines had reserves equal to around 10 months of imports, the highest in Southeast Asia. Thailand stood at 9 months, while Vietnam managed just 4. That's a powerful statement of financial strength and preparedness. At the end of the day, the Philippines isn't just riding the wave of growth, it's proving it can weather storms, attract investors, and keep building momentum. This isn't just a tropical getaway, it's a country that's quietly shaping its future, and the world is starting to take notice. As of 2021, the Philippines has pulled off something impressive. Its foreign reserves actually top its external debt by more than 102%. That puts the country ahead of neighbors like Vietnam and Indonesia when it comes to having enough financial firepower to protect its economy. These reserves aren't just numbers on paper. They're a safety net, a confidence booster for investors, and a major plus for the country's credit reputation. And the results are showing. The Philippines has earned a solid BB+ credit rating from S&P, outperforming most of its neighbors, and even edging out larger, newly industrialized players like South Africa, Mexico, and Brazil. In short, strong reserves have become the backbone of the Philippines' economy, fueling resilience, stability, and credibility on the world stage. That's good news, not just for the country, but for every investor who believes in its future. Inflation, it's cooling down. The latest CPI numbers confirm it. That's a positive sign for households and businesses alike, and it strengthens the country's growth story. Looking ahead, The Philippine economy is expected to keep performing strongly over the next couple of years. But there's a catch. To stay competitive against heavy hitters like Vietnam and Indonesia, the Philippines will need to accelerate its infrastructure development. Roads, ports, and connectivity will be the deciding factor in how far and how fast the country can go. Here's something even more remarkable. Despite running a hefty trade deficit of over $50 billion in 2022, meaning it imported way more than it exported, the Philippines still came out on top. Its overall balance of payments stayed positive, and its economic growth for the year smashed expectations, even beating forecasts from international financial institutions. That's not just resilience, that's momentum. Looking ahead, growth is projected to come in at around 6% for 2024, with another strong year right after. The outlook? Pretty robust. The Philippines is proving that even when global headwinds hit, it has the reserves, the credit strength, and the drive to keep its economy moving forward. This year feels different, and for good reason. Last year delivered the strongest growth the Philippines had seen since 1976. After such a record-breaking run, it's natural for growth this year to cool off a bit. And yet, here's the surprise. Despite a multi-billion-dollar trade deficit, the Philippines has actually managed to grow its foreign reserves. That's not what markets expected. It's better. Much better. Yes, the economy has slowed. Yes, consumers are feeling the sting of higher prices and pulling back on spending. But the story doesn't stop there. Even with inflation running high and interest rates weighing down demand, the economy still clocked in at a solid 6.4% growth. That kind of resilience is hard to ignore. One big reason? The Philippines has become a global powerhouse in the business process outsourcing BPO industry. Everything from call centers to data processing to medical transcription. In 2022 alone, the BPO sector generated a stunning $36.9 billion in revenue, up more than 10% from the year before. At the same time, the government is leaning into public-private partnerships to fast-track infrastructure, bridging the gap between lagging and leading regions so the whole economy becomes more efficient. Add to that an ambitious energy transition, moving away from fossil fuels and towards solar and wind, and you can see the shape of a future-ready economy taking form. And we can't forget the role of overseas Filipino workers, OFWs. In 2022, they sent home $36.1 billion in remittances, up over 7% from the prior year. Those inflows provide a steady stream of foreign exchange, helping offset trade deficits and keeping the economy moving. Backing it all up, the Bangko Sentral ng Pilipinas, BSP, has been steady and disciplined with its monetary policies, keeping the peso stable, managing foreign capital, and building up reserves. As of August 31st, 2024, the country's gross international reserves stood at $99.8 billion, enough to cover a remarkable 7.4 months of imports. That's more than double the international standard of just 3 months. What does that mean? The Philippines has a strong buffer against global economic shocks. It's a signal of stability, and it makes the country even more attractive to investors looking for reliable growth in an uncertain world. Looking ahead, yes, the trade deficit may widen further in 2023 as global commodity prices stay high and the peso faces pressure. But the outlook is still positive. Between resilient BPO earnings, strong OFW remittances, and the BSP's commitment to safeguarding reserves, the Philippines is positioning itself not just to withstand challenges, but to keep thriving. The Philippines, a breathtaking archipelago right in the heart of the Pacific Ring of Fire, is known worldwide for its dramatic landscapes and powerful natural forces. Earthquakes and volcanic eruptions are part of its story, shaped by its unique location near the South China Sea. But that same location has also blessed the country with stunning horizons, rich biodiversity, and an abundance of natural resources. According to the World Bank, these natural endowments contribute nearly 2% of the Philippines' GDP. We're talking about gold, nickel, chromium, marble, and more. And here's a standout fact. The Philippines supplies 5% of the world's nickel production, putting it squarely on the map of critical global industries. Every administration faces different challenges, and the economy has seen its share of ups and downs. But today feels different. As leaders put more focus on smart allocation of resources, there's growing confidence, especially with nearly 200 infrastructure projects ready to roll out. Investments won't just flow into markets. A big portion will go directly into building the nation's backbone. And let's not overlook geography. Strategically positioned between economic giants like China and Japan, and surrounded by emerging players like Malaysia, Indonesia, and Vietnam, the Philippines sits at the crossroads of Asia. That makes it more than just a trade partner, it makes it a geostrategic hub. On top of that, the Philippines' active role in ASEAN strengthens its ties with regional partners, encouraging foreign direct investments and aligning the country with efforts to keep Southeast Asia peaceful and cooperative. It's this blend, natural wealth, smart planning, regional alliances, and a prime location that makes the Philippines not only relevant, but increasingly influential on the Asian stage. As of 2024, Japan leads the pack as the biggest source of foreign direct investments in the Philippines, committing over 20.3 billion pesos, according to government data. Meanwhile, on the global stage, China's Belt and Road Initiative, BRI, is reshaping international trade and infrastructure. The Philippines has signed on as a full member, signaling not only confidence in this ambitious project, but also a commitment to long-term collaboration with China. It's a bold move that highlights the country's willingness to work with both East and West, refusing to limit itself to bloc politics and instead building bridges wherever opportunity arises. One clear outcome of this approach is the Philippines' role as a leading exporter of talent. Millions of overseas Filipino workers, OFWs, especially in the United States, send billions in remittances home each year. These inflows make up a sizable portion of GDP and provide a reliable cushion for the economy, proof of how global ties fuel financial stability at home. Of course, the road hasn't always been smooth. In the 1990s, the Philippines faced serious setbacks, weak reserves, heavy deficits, and multiple economic shocks. But the Aquino and Ramos administrations helped turn things around by encouraging flexibility and reducing government interference in industries and banks. Those reforms laid the foundation for today's stability and growth. Fast forward to now, and the results are clear. The Philippines ranks 78th globally in passport power, according to Henley and Partners, reflecting its improving international standing. In the past fiscal year, GDP grew 4.4%, showcasing resilience despite global headwinds. The International Monetary Fund projects the country's nominal GDP at $440.9 billion in 2024. Services dominate the economy, accounting for over 61% of GDP, while tourism alone adds more than 5%. These numbers reveal not just growth, but real diversification, spreading strength across multiple sectors. Careful fiscal management, disciplined monetary policies, strong remittances, foreign investments, and expanding exports have all combined to give the Philippines a sturdy economic foundation. Together, these forces are helping the country gain investor confidence and cement its place as one of Asia's most resilient and attractive markets for foreign capital. The Philippines has proven it's more than just an island nation. It's a rising economic force built on resilience, smart strategy, and global partnerships. From robust foreign investments to the unstoppable flow of remittances, its story is one of growth, stability, and opportunity. And the best part? The journey is only beginning. If you enjoyed this video and want to stay ahead on stories shaping the future of economies worldwide, don't forget to like, share, and follow for more.